Hi, my name is Blake Olson, and I want to share a quick story that happened to me on my trading account about 2 months ago with the broker Hugo's Way. Essentially, I want to give a little bit of a preface of exactly what happened. Basically, I was doing extremely well. I have already started my company at this point, and I was on consistent calls with my students, and we were making quite a lot of profit consistently by using Elliott wave formula with trading, and some of the other videos on my channel are actually during this time was with the same account that this took place with. So I'm going to go ahead and start off by showing you the end results of the account just to explain, and then I'm going to go into further detail of how exactly I did it and what exactly happened. So let's go ahead and start off by going to my FX book. So this is kind of funny. So this is a breakdown of exactly how much I made over the course of this account. And this looks really, really bad at very first glance. You'll see right here in the gain, it says negative 97%, which is obviously horrible. You do not want to see that when you're looking at a trading account. However, this is actually completely false, and I'm not 100% sure why my FX book is saying it's that gain, because if you look right below it, you'll see that it is actually an absolute gain of a positive amount, actually 4x the account. I'm going to go into a little bit of detail of what exactly happened, but basically if you look on this center graph right here, it might be a little bit small, but what you can see is it started off at 0, obviously, and it very quickly grew into quite a sizable account within a very short time frame. Looks like we started at April 2nd, and by May 10th, we had already almost tripled the account. Again, this is by using Elliott wave for the most part, along with other strategies that I use. And I want to show you a very particular example of what exactly happened here with this big loss. And I really like showing these kind of things because it's something that everyone can learn from. And at the end, we'll come back to this screen here and talk a little bit more about the whole details of percentages won and things like this. So let's go ahead and move on to the charts, and I'm going to show you what happened there. So this is the candle that I want to talk about. And right now we're on the daily chart on the US 30. So I was trading the US 30 at this time, which of course is the Dow Jones Industrial Index. It's the top 30 largest stocks in the US. It makes an index very similar to the S&P 500 or the NASDAQ. However, it's a different one. They're not exactly the same thing. Essentially, the US 30 was one of the two indexes that the Elliott wave strategy was formed on, and that is why I believe Elliott wave strategy works so well even on small time frames on the US 30, where it doesn't work quite as well on other foreign exchange currency pairs. So let's go ahead and take a little bit closer look on what exactly happened in this large candle here. So we're going to look at the daily now, and now we are looking at the 15-minute. So this is just to show you of a typical way that I like to look at charts. This is an example of my real markups action. I'm making money from this exact strategy here. Basically, once you can identify a relative low, what I would just do is I would see how much of a low it really is. By how much, I mean what degree of low. And I'm not going to go into too much detail of exactly how Elliott waves work in this particular video, but they're extremely powerful, very, very good strategy. And that is what I do most of the time in my trading. So over to this screen, this is how my trade setup normally looks in terms of time frames that I use while teaching. I still teach to this day. I don't use this particular account anymore, and I'm going to get into exactly why that is. I don't use the broker Hugo's Way anymore for this, the reason I'm about to show you. But basically, my setup that I use is the 1 minute, the 5 minute, the 15-minute, and the 1 hour. And these are very low, very small time frames. And the reason why I use these smaller time frames is because this is such a large index that basically the price moves quick enough and accurately enough on even these smaller time frames. You can use them to really maximize your trading style. Again, I'm not trying to go into this so much in this video. Just want to give you a really brief overview of how exactly I was even forming this trade in the first place. As you can see here, this is exactly my setup, not my exact setup that I had. I made an approximation of what I was most likely looking at the time. Again, this was about 2 months ago. I just decided to make a video on it today. And it was probably something like this. It was an upward ABC pattern to form a B up here in between a larger degree of an ABC pattern. So basically what I was expecting is there would be an A over here, or 0, excuse me, over here, and we'd have the A right here, and then wherever the C is on 1 degree larger would have a B, and then a C would be coming down here eventually. So I was buying this right around here at these Japanese candlesticks, these dojis over here at the bottom. It doesn't really matter which one of these you enter at. They're all pretty similar. Again, we're on the 15-minute chart. So this is not a ton of data. Even this whole range of dojis here is $112. It's a decent amount. So for every entry you have in this particular range, if you entered, if you bought at the very bottom of this range I have selected, and you got at the top with one entry of the US 30, you would have made $112. And vice versa would also be true. If you got in at the top of this range and you got out at the bottom, then you would have lost $112. That is how quickly this market moves. It is not something for the new average trader. It is something that you really have to spend a lot of time researching before you get into this. It is not the exact same thing as normal foreign exchange with currency pairs. This basically you trade the CFD, the contract for the difference, with this. So what I'm looking at here is a subset of an ABC wave. So we're looking at ABC wave inside an ABC wave, the idea of fractals basically. And I was doing really, really well. I got a really phenomenal entry somewhere in this realm around here, and then I ended up taking profit pretty close to right around where it was changing. It was kind of dying down in momentum, so I decided to take profit around this area here. And then I got in a new entry. This is key. I got in a new entry basically once it broke out around this level here. And I had a stop loss on, but that's not actually what's important. What is important is I did a huge, crucial mistake. I was so confident. I was winning so much, so frequently. Phenomenal wins. And what I decided to do is leverage a little bit more than I should have. Now, I don't mean to say over leveraging in the case of I have a $100 account and I'm going to use a whole standard to trade with or something, and that's 1,000 times leverage. Don't recommend that at all. You can only do that with certain brokers anyways, but not with a broker that I have. With the broker I have, you could have done up to half a standard with $100. That's up to 500 times leverage. Normally, that's what Hugo's Way is. However, a lot of people don't know this. For indices on Hugo's Way, you can actually only use 1 to 200 leverage. Now, I'm getting a little bit sidetracked, but that is kind of key knowledge to know. If your broker says you have a certain amount of leverage, you don't necessarily have that amount of leverage for everything. That's usually just the case for either only majors or only foreign exchange currency pairs, not so much indices all the time. Anyways, stop getting sidetracked. Basically, I got into a buy that was pretty decent. It was right around on this candle here, and I went up quite a lot in profit. It doesn't really matter where this profit is, I'm just showing you this for entry purposes. And basically, I was up, and it came down a lot, and that's really started to freak me out a lot because it was an overshadowing candle, and I didn't like that at all. I was getting ready to sell. I was like, you know what? I'm sure that the next candle will be positive. So I see this next candle forming, and it looks really, really good so far. I'm like, you know what? It's green. It's probably going to go up a little bit, maybe to the 618 of this little range here. Again, remember, I have the 1 minute, the 5 minute, 15, and hour chart up. So I'm able to look really, really closely. Unfortunately, this is too long ago for me to look at the 5 minute or 1 minute chart, and the 15 is as small, so I can go for this particular example this far back in terms of data as of the date of recording this. And essentially, what happened is I wasn't aware of this, but the market actually closes for 15 minutes. Really, really strange. On Owanda, it closes for 15 minutes. Now, when does this close? It closes at 13. If you see at the very, I'm pointing on my screen. If you see at the bottom of the chart here, 13:00. That is when That's 15 minutes later after this. It closes for 15 minutes and reopens up at 13:30. Again, we're on the 15-minute chart. So something fishy is going on there. There's a missing candle. The market closes for 15 minutes every week on Friday. May the 10th was a Friday. At that time, local time. And basically, it usually opens up again for 30 more minutes before having its real close. Now, it didn't have much movement, as you can see in these last two candles, and then it actually closes for the weekend after that. If you're not familiar, forex is a 24/5 market. US 30 is usually a 23/5 market. Basically, it usually closes for an hour every day, and but on the weekend it's a little bit different. So it's a little bit more, it's a little less than 23 hours in total opening time. Anyways, from this section here, right up here, I could not exit my trade, and I did not want to hold this over the weekend. Again, I over leveraged just a little bit here, but I was up, so I was really excited to exit. And I was trying to exit on Hugo's way right before it closed. So 13:15, I pressed the close button. I'm like, okay, this candle is formed, and exit. And I waited, and it starts to load, and it does not exit. I start freaking out because the chart isn't letting me exit, and I'm not confident about my position over the weekend. And as you can see, and if you could only see till here, for example, you might be saying, oh, it looks like it's going up in general. If you can't see what comes after this, of course we can go back on the data and see what happens now. But basically we see some more candles forming, and then this is when the weekend closes. So I'm like, okay, you know what, this looks okay. It might still be on the C wave. We might see price move up, I guess. I was basically sweating bullets the entire weekend. As soon as Sunday opens at 2 o'clock. However, the CFD market almost always, it opens at 3 or later local time. So normal forex opens at 2. However, CFDs open at 3. I'm aware of this before this happens. I was not aware about the 15-minute rule. So basically, Hughes Way did not open back up for this, and that's why I was sweating bullets, not able to exit. I was trying to exit for the entire hour after this. I wasn't able to. Market opens up, and this is false data that you see here. This did not happen like that. That is not what this actually looks like. It looks like price opened up here and it moved down. Not the case. Price started around this area here, and it just went down from there. It did not start up here. It moved immediately to here. I remember because I was looking at it, and I was frantically trying to exit every single second before it was even opened or anything like this. I really wanted to get out of all of my trades. I had many trades, each of which were fairly small, but basically I wanted to exit before it even moved. So I'm in profit now. And this really sucks because what ended up happening is I paid a very large swap fee in addition to having all those trades open as well over the weekend. Two things I did not want to do. Again, you pay triple swap because it's over the weekend. You pay swap fees for each of the 3 days, 3 trading days. Anyways, market opens down, and I don't even have to exit. The reason why, I'm getting margin called, which is an awful scenario for anyone that's experienced this. Horrible thing to experience. And at this point in time, I'm freaking out because I just built up my account to around $9,000 from $1,500, and basically all of that gain went down the drain. Horrible way. It actually, at this top here, at the peak, it actually went a little bit over 10,000. So I was really feeling good at this point, and not feeling so good at this point because, again, a little bit of over leveraging. And if you look at the distance, you can notice it's about equidistant, and this practically killed the account. Again, started at 9. Down here, my account value was about $200. Now, it didn't margin call every single entry because, again, I had many entries. It was going down slowly, and I'm just watching. I'm not even exiting anymore at this point because I'm just in shock. I'm watching my screen as charts or the trades are automatically being deleted, and I can't do anything about it. It holds this, and it stays this way for a very long time, and I'm just freaking out, and I'm not knowing what to do. I'm wondering, should I close all of them? Should I try and keep some on, and maybe it will bounce back up on the next candle? I have no idea what to do, because I wasn't expecting this at all. I was playing with my emotions, which is a horrible way to trade. And as you can see, price did nothing for over an hour. It just stayed practically still, and then started to move down. And this made me freak out even more. I think I got one more margin call from this wick down here, and then I think I exited my other positions here. Anyways, finished about $200 in the account, in the balance, in the equity. Horrible feeling. Basically, that is what happened. Ever since that time, I just stopped trading for the rest of the day. I took a step back. I was like, okay, this is really bad. I'm so thankful that I didn't lose my full account, but going from 10,000, 9,000, doesn't matter, to $200 over the course of the weekend is a horrible feeling. And it is not good at all. Basically, what I do to fix this is, if I go back onto this screen, you can see this was May 12th and May 13th is when the down spike happened. Let's see, this is off by a little bit. Oh, let me just delete the screen. This should be here. Here's the down spike here. We're still on the 15-minute chart again, and basically went down for a little while. Fortunately, I was very aware of this, and I was able to find out this really easily. I used more Elliott wave. I started trading again on these later days, and I lost a little bit more money here, and I think I found this low very easily on the 15th. And ever since the 15th, I was able just to grow the account all the way back up. Now let's take a look one more time at my FX book for this account. So I'm not sure if I can go into balance. Yes. So what you can see here is, by the way, for that trade, when I was saying it was 9,000 or so in terms of value, that is equity. That is not balance. So again, I was kind of over leveraging, so I went from about 5.9, 5.6 up to 10 or 9 and even $10,000. It wasn't quite recorded on the account, but it did reach that level at one point in time, very briefly. Again, I didn't exit there, so that's why it wasn't recorded ever into the balance. Basically, what happened after that, it went down for just a couple more days until the 15th, and after the 15th, which you can see on the charts again, is this the 15th? Where did we go? Sorry. 15th is right here. So ever since this point, I just got into the buys here. Really phenomenal entries. I was able to enter like 2 positions at the beginning at the total. And that was considerably, I was over leveraging intentionally. I was like, you know what? This account has $200 in it, and I'm just going to use what I know and my knowledge of trading, and I'm going to try and bring this account back to life. I'm not going to give up. I'm not going to put any more money in. I just want to see this account go back to life. So I trade these individual swings. I exit here, I enter here, exit here, exit here. Not specifically these exact points I'm saying, but I'm trying to illustrate the idea that I am very much actively trading. And as you can see, I had a really good bounce up day. My balance hit negative number. And I believe this is why my FX book says I have a negative gain, is because at one point in time my balance was negative. The reason why it didn't zero me out of the account is I did have positive equity. So I had good trades going, and then I had a bad trade that I took out of the bad trade, and the bad trade made my balance go negative, but the equity from the good trade stayed firm and ended up being a good trade. So then I was able to recover from that and make $4,000 from only $200 in a single day. And the way I was able to do this was from a little bit of over leveraging. Again, I don't recommend doing this, but I had a really good strategy, and basically I was using Elliott wave to this strategy, and I was very, very disciplined at it. And this was from many, many different trades. I traded for pretty much the whole entire day, and then nothing really happened for a couple days, and then I found another really good opportunity, and I was able to bring the account all the way up to $7,000 again, from 200 to $7,000 in a very, very short time frame. This was from, well, I mean, if you're looking at the balance, it was from the 15th from a zero, negative even, to the 28th. So this is a really, really short time. It's 13 days to go from negative balance to 7K, or $300 of equity or so to 7K. And I actually end up withdrawing this amount and pocketing this account, and no longer staying with Hugo's Way. The reason why I did not like Hugo's Way is because they did not reopen on, I can't even find it anymore. I think it was this one. It was this one. They didn't reopen for these two candles. And Awanda opens again for those. Other brokers reopens again for these two. All the brokers close for 15 minutes. That's okay. I understand that. But Hugo's Way does not reopen for these two candles here. And that's the reason why the market closed for 15 minutes is kind of like a warning, like, hey, the market's closing for the weekend. You might want to exit. And that's what most people are doing in between this 30-minute window here from 1:30 till 2 o'clock on Friday local time. And that's the main reason. That's my story of my comeback. Just a really quick, brief gain required to make up for loss. This is not my picture, but I found this really interesting on exact percentages. And as you can see, if you have, depending on your loss size, that's the red here. If you have only 10% loss on an account, then it only requires 11% of a gain after that to go back to break even, essentially. So as you can see, as you lose more money or more percentage, it takes way more, an exponential amount of more leverage, or excuse me, not leverage, percentage gain to come back from that loss, depending on how big it is. So my loss was actually even larger than 90, and I actually didn't fully recover. If you're being very technical, I went from 9 or 10K to 7, but that's in my book. Yes, that's a loss of $2,000. I would love to take a loss of $2,000 rather than a loss of the entire account. So in my book, this is still a win, even though it's technically a loss of $2,000. But I was able to make back almost all, relative to the account size, of the money back for this trade. So this is my story of the comeback. I have a whole nother story coming out really soon for my other trade. This is the one I'm doing actively with the company that I own. I own this company. It's called VVS Academy. In VVS Academy, I teach people how to trade properly, not like this, not using over leveraging, not using crazy risks like this or anything like that. This is a very one-time case. I would much rather people's accounts look like from April 2nd up till May 10th, rather than everything after this. Everything after this is quite crazy. This is much normal. This is what I teach. And that being said, this is going to wrap up this video. Thank you so much for watching, and look out for the next video very soon.